Welcome to Beyond Bitcoin for 2025. Is it finally the year Bitcoin will become mainstream? Trump's establishing a strategic Bitcoin reserve, implementing crypto-friendly regulations and establishing a crypto advisory council. But what does this mean to numbers go up? And what about the confluence of AI and DeFi? We believe it's a revolution that we need to be involved with or miss out. Don't forget, help us, like us, subscribe to us. We look forward to keeping you up to date with all things crypto in 2025. Good morning and welcome along to Beyond Bitcoin. Welcome along to 2025. I just realized today this is our 620th video. So if you're enjoying these programs, please like and subscribe and engage. Hey, 2024, the way I look at it, it was basically the year that set up 2025. I mean, let's look at it for a moment. 32 spot ETF exchanges were established in 2025, still only representing 5% of all Bitcoin turnover. Bitcoin rallied 120% from $42,894 to $93,576 by the end of the year. But of course, the tectonic change came on November the 6th when Donald Trump was elected as President of the United States. And what this has done already is that it set in place the unraveling of Choke Point 2.0. And even on a positive note, in addition to that, it set in place the potential of Bitcoin becoming a national treasury asset worldwide. I think this is the beginning of the next super cycle because we've got money liquidity flows that are high, we've got political positions in place, we've got large institutions now realizing this is a legitimate asset. Good morning, Greg. What do you think?
Good morning, Derek, and Happy New Year to all of our subscribers. Yes, look, it has been the transition on Bitcoin with Trump's election has been massive. From the retirement or the resignation of Gary Gensler from the SEC.
Yes.
Thank goodness he's going.
Yes,
yeah.
Goodbye, good riddance.
To the removal of Choke Point 2.0, but also then a move towards a positive outlook for cryptocurrency rather than US trying to hold it down to restrict the growth. It's moved past even a neutral position to now being a positive one where Trump's policies want to see a lot of these new protocols being built in the US and the revenue being kept in the US. He wants to see Bitcoin mining in the US, very pro-US, but it's also pro-cryptocurrency given the large number of users and protocols that are based in the US. So that regulatory uncertainty that we've had for so many years now, that's off the table. That's kind of gone. And really now we've had a number of tailwinds. And I think you mentioned it as well, alluded to it, the institutional investment. We've never had the institutions here. We've never had a cycle where there's a natural buyer stepping in to buy Bitcoin when the market comes off.
What does that mean, Greg? What does that mean? Because this is something that we've never had exactly. This is something that we've seen, particularly in nations like Australia, where superannuation means there's a constant and massive flow of money into the equities exchange. But in the past, when Bitcoin or crypto has become out of favor, there's nothing, no support. What do you think this is going to mean to Bitcoin and crypto?
I think the asset allocators are now starting to realize that having 2 or 5% of your portfolio exposed to Bitcoin dramatically enhances the risk profile and the return profile. Bitcoin is a very much uncorrelated asset to traditional equities. Its correlation has peaked and troughed over the years, but we expect it to break away from equities again because we do see it as a very, specifically on Bitcoin, a very unique asset class. Michael Saylor's been talking about Bitcoin as the safest asset of the 21st century. It's the 21st century's version of US Treasury securities, that it's digital property. So we certainly see the potential for that to continue to evolve as a narrative, as a story, and for pension funds, superannuation funds to start allocating a small amount towards Bitcoin. And then you add also the corporations are now coming under pressure from BlackRock, who are one of their largest shareholders, to start holding Bitcoin on their balance sheet as an inflation hedge. So there's what I'm suggesting is like there is in the traditional equities market, there's always a natural buyer of equities, which are the pension funds, because of the strong inflows they get every week.
Yeah.
That we haven't seen that strong support for Bitcoin ever. It's been a very much a retail dominated market. That is now slowly transitioning for the better, we think. And that'll create, I think, a much sort of stronger environment, and that also gives way to potentially having a super cycle coming through. I'm still not convinced yet that we haven't broken that 4-year cycle that we've seen ever since Bitcoin's initiation, but we'll certainly see. Hopefully, the pullbacks will be less significant going
That's
forward.
right. Look, there's a lot of talk about that 4-year cycle now changing, and there's a school of thought that thinks that we're not going to see the cycles of downward cycles occurring. I agree. I don't think that's going to be the case, but we may see reduced volatility over that period of time. But Greg, 2025, what do you think is going to be happening in 2025 technology-wise? Because as listeners, I think there'll be listeners that are sitting there going, what does this mean for me for investment wise? And I think you've probably heard about Bitcoin and treasuries entering the marketplace, institutions entering the marketplace. And the likelihood is that may see Bitcoin somewhat more stabilized, maybe a little less volatility, but certainly a lot more on the demand side over the next few years, and that can add up to price goes up. None of this is investment advice, never is, but these are our assumptions when we're looking at running a fund, and it's certainly what our belief is. And so then we've also got the world of what's called alts. In other words, anything that is not a Bitcoin cryptocurrency. And in fact, the alts, of course, are the technology, the mechanism, the corporations, the banks, digital versions that will run this economy. So they are very important. What do you think is happening over the next 12 months?
Yeah, I think there's some interesting opportunities and things, the way things will play out. So you've got to, I guess, the way I look at the layer one protocols, things like Ethereum, Solana, Avalanche, Sui, which is a new blockchain. These are the underlying infrastructure that the entire blockchain operates on. It's basically like owning the infrastructure layer of the internet. So owning a stake in the internet protocol layer, or the TCP, the transport layer, or the HTTP application layer, it's akin to that. So it's a fundamental investment. The issue that I have is the valuation at the moment. So you look at say Ethereum, which is it's a $388 billion market capitalization. And then you look at the amount of fee revenue that ETH generates. It generates about $10 million a day, roughly. So if you annualize that, it's $3.65 billion. So with a $388 billion market cap on $3.65 billion in fee revenue, it's currently on about 106 times market cap to revenue, or price to revenue. That's a pretty huge multiple. But look, it's not outside the realms of what we see in some of the speculative tech sector. And you've got to think of investing in Ethereum as investing in a tech stock, really. To me, it's like the global app store. It's the fundamental underlying glue that allows all of these digital applications to run off the back of Ethereum. So that's trading at a pretty hefty multiple. And then you have a look at something like Uniswap. And Uniswap is a digital application on the Ethereum network. Mm-hmm. It's the main way that people swap tokens on the ETH network. They generate trading fees every time there's a swap going through. They're capped at around about $8 billion, and they generate about $600 million in LP fees annually. So that gives them a price to revenue multiple of 12 times.
Gosh, let's just stop there for a moment, Greg, because you're seeing Berkshire Hathaway back out of the exchanges at the moment, out of equities, because they think that the average price earnings ratio of 25 to 1 is excessive, and there really isn't investment opportunity there. You've just heard of Ethereum being 100 to 1 or 106 to 1. That's extraordinary. That really is a hope and aspiration for something much, much bigger than Ethereum already is. But 12 to 1 is an old school industrial product with a limited future. It's not a bad price earnings ratio, is it?
It's not necessarily price earnings, it's price revenue.
Okay.
So yeah, you do have to take costs off that, which we don't
Yes.
know.
Yes.
Yeah, so that's one thing that you get with the sector is you get revenue, but you don't really have a very good look through in terms of the costs of the business. There is no reporting requirement. They don't have to release
Yes.
quarterly financial statements. So look, this is the biggest issue that some institutional investors have with investing in this space is they need to be able to value an asset to be able to invest in it. And that's their biggest concern at the moment is how do you value these things? And at
Yes.
the moment, price to revenue multiple is pretty simplistic. It does give you an idea of relative value. So not
Yes.
necessarily absolute value, but relative value. And I guess the point that I'm trying to make here is the layer ones are the underlying infrastructure of the blockchain. There's no reason they should be trading at a massive premium. They will become commoditized.
Mm.
Their returns will be earned away because if they don't continue to innovate and grow and become more scalable and faster and more secure and more decentralized, then other blockchains will come in and try and take that market share from them. So we're just looking at, I understand why Ethereum and Solana have such a high market capitalization because it's the safest way to invest in crypto because
Yes.
you're investing in the underlying layer, and every time someone makes a transaction on Ethereum or Solana, there's a certain amount of Sol or Ethereum that is used as gas. That's how we pay for everything on these networks. So I totally understand why that is the case, and that's why you hear people always talking about, oh, this next protocol is the Ethereum killer,
Yes.
because it's almost a race to the bottom of which is going to be the dominant blockchain going forward. There probably won't be just one. There might be two or three. There might be five, but there's not going to be several hundred. So it's really the race to the bottom there. So what I guess I'm trying to get at is I think there'll be, over this period of time, there'll be a shift in the market's view of how it values the layer ones into how it values the digital applications, the
Yeah.
Uniswaps, the chain links, the Jupiters, those sort of protocols that are much more undervalued on a relative fee base, much more undervalued relative to the fees that they actually generate. So they are generating real cash. So I think that's an interesting way that will play out. I think also in Ethereum with the L2s, Ethereum has really struggled. It's really been underperforming for the last 18 months,
Mm.
2 years, especially relative to Bitcoin, if you price ETH relative to BTC. And I think that's because the layer twos are really eating Ethereum's lunch. They're seeing a lot more of the transactions being done on the layer twos. But what is interesting to me is the most successful layer two at the moment is the base layer, the base layer two. That doesn't actually have a token. That has the largest amount of total value locked. It is a layer two that was developed by Coinbase. You don't actually need a token to be operating on the layer two because everything's priced in ETH. So it's Ethereum on Base or
Mm.
Ethereum on Polygon.
Mm.
So I think that makes the investment cases for some of these L2s not quite as strong as we perhaps thought it was. And plus the pressure that Ethereum is coming under when we're seeing growth also in new blockchains like Sui, which is an emerging blockchain. It's the team from Facebook when they tried to get a blockchain up and running. That's getting quite a bit of traction now. It's low cost, it's fast, and it's scalable. It's very much like a Solana 2.0. So yeah, there's a lot of, I think people are going to switch a lot from those L1s into looking for value in some of these digital applications going forward.
That's right. And it's always been our view that we progress up the technology stack as it moves through. Layer one protocol, as we just talked about, blockchain. Layer two protocol, side chains that are transacting. Layer three protocol, decentralized finance. Layer four protocol, Web 3.0, which is the ultimate destination, really, which is just the web in itself and commercializing. And we see that a lot of value is going to appear in that progressive growth towards Web 3.0. Agreed. BTC staking, what do you think is happening there?
Well, staking your BTC, I hear you say, questioningly. Yes,
Yeah.
Bitcoin is a proof of work protocol. So
Mm-hmm.
you can't stake your Bitcoin anywhere on mainnet. But what we're seeing an increasing demand for DeFi on Bitcoin. That's coming potentially from the Bitcoin layer twos, but also more so from protocols that are now wrapping BTC and putting it on the Cosmos and Solana blockchain. So you're seeing the likes of Babylon on Cosmos and Zeus on Solana, who take the BTC, they deposit it in a vault, and then they mint or they issue a wrapped form of BTC on either the Cosmos or the Solana blockchain. So that is a way for people to earn an investment return on their Bitcoin. It's all permissionless, it's all decentralized, it should be trustless. The only issue I have with it is the risk of a hack. So that's the biggest concern that anyone has when doing anything in DeFi and whenever you're trying to earn a return. Obviously, these protocols are very different from the centralized Celsius that we all know about that went horribly wrong.
Yes.
This is all on the blockchain. In the case of Babylon, that Bitcoin is used to effectively validate some of the chains on Cosmos. And in the case of Zeus, we're not quite sure how they're going to earn the income yet, but we think they're going to lend that Bitcoin out to VCs, which I'm a little bit concerned about. But one thing we do know is that at ZBTC, you'll be able to use that in DeFi protocols on Solana. So you'll be able to put it into a liquidity pool and then earn some sort of income on it. But as with all of these, you need to understand where the income is coming from.
Yeah.
There's a growing trend towards that. We're already seeing significant growth in Bitcoin that's being wrapped on these two protocols. I'm happy to sit there and watch it. I understand why people want to earn some income on their BTC, and we'll see how that sort of plays out over the coming 6 months.
It does make common sense though, Greg. There's 1.8 odd trillion dollars as of today, capitalization of Bitcoin, sitting there doing nothing in regards to earning income. What it's doing, of course, is providing all of those things, which is providing hedge against inflation, a counterposition against equities, and of course, an asset that has proven to be exceptionally good in performing over the recent times. Now, another item that doesn't provide return are stablecoins. I just think it's the best business model in the world. You give me money in US dollars, I then bank that and earn interest on it, and then you get a stablecoin and you can trade it, but you'll never get interest on it, well, unless you go and place it on various staking or APY returns. But it's a great business model. Surely in the future, we're going to see interest getting paid on stablecoins along the way.
Yeah, I think that's a definite possibility. I think for me, what we're really focused on is the significant growth that we will see in stablecoins over 2025. PayPal have released a stablecoin. Even our friends over at Ripple have released a stablecoin.
Yeah.
I think people understand that if you're going to do international money remittances, then doing it on a blockchain like Solana, where you can transfer USDC seamlessly in seconds around the world for less than a cent is the way to go forward.
Yes.
Now, I think that's well documented, and I think the potential to earn income. I mean, there's lots of protocols that are doing it. Again, you need to check how they're generating that income. Is it being rehypothecated? Is it being leveraged? And all those sort of issues. And obviously the safety of the DeFi protocol as well in terms of security. But that you can earn up to 10%, and I've even seen up to 30% you can earn on stablecoins at certain points in time when the demand for stablecoins is high. These platforms will offer you a very high rate of return. Again, it's all on blockchain. It's all on the chain. It's all decentralized. It's not another Celsius. That's creating opportunities. But I think the other thing that sort of leads me to is this global remittance market. And I guess we want to talk a little bit about X, which is a token that I'm not a fan of. It's had a significant rally in the past couple of months. It's now the third highest market capitalization at $153 billion. To give you context, Solana is about $90 billion. That's 1.5 times bigger than Solana. And all it's looking at doing is global remittances. And I see their technology sort of being old tech. When you've got the likes of USDC that operates on 15 chains, and you've got the potential for those remittances to happen so much easier without actually having to own the XRP token, which is part of the Ripple business model, where Ripple Labs own a significant amount of the token supply. I know that's escrowed and it's released monthly, but the whole idea was that you, as an institution, would need to use that XRP to pay the gas on the network. Yes, it is a very, very cheap and low cost transaction system. Huge promise. But to me, it's one of those coins that it seems like a lot of people that were in crypto in 2020 have come back into the crypto market because they've seen Bitcoin go to new all-time highs and they've gone out and bought XRP. For me, I look at something like Chainlink, which is really it's a tenth of the market cap of XRP, and you look at what they potentially have in terms of Oracle services for DeFi applications, what they're doing in terms of enterprise adoption with major companies like Google, Swift, and the large financial institutions. You then look at their cross-chain interoperability protocol, CCIP, and then the fact that they're getting involved in real-world asset tokenization projects. I just think it's a much more sensible investment investing in Chainlink than it is in XRP at the moment. I know there's a lot of fans of XRP and people are quite excited about the prospect. Certainly with the SEC, the legal case looks like it's really coming off the boil in terms of that regard. I just look and wonder at the opportunity there and think Chainlink at $12.8 billion versus XRP at 153. I think Chainlink has a much more diversified and potentially growing share of the whole system, especially with its relationship with Swift, with the international banking network. I just think it kind of potentially leaves XRP on the outer. And I think Chainlink for me is a much better bet. But anyhow, obviously we'd like to finish on something a bit controversial, and I think that's probably
XRP always controversial because the XRP army come and attack us when we say something that is not to their liking. This is a very interesting situation because for the audience, just a reminder, Greg's an analyst with 25 years experience analyzing equities and businesses and valuing. And here he is for the last 5 years in digital assets, and there's still this analyst that looks at these underlyings and says, I can't see the rationale. But at the same time, also, of course, you're fully aware of what sentiment and momentum is in this area. Yeah. And Ripple's sentiment is extraordinary. If you go onto TikTok or YouTube Shorts or anything, it's Ripple. It is pushed hard. And I think what we're seeing is Ripple tremendously succeeding in their price going up, number going up, because the momentum and sentiment is strong and people are just riding the wave. Be interesting to see how far that wave goes or whether the tide goes out. We will see. But logically, your statement regarding Link versus Ripple, I think would be well heard in the equity research rooms and in investor rooms. So to finish off today, what else do you think for 2024, 2025 we're going to see happen that's going to make a big difference?
I think AI. We've talked about this before. Artificial intelligence. Let's call it's machine learning, large language models. We're not at AGI yet. Maybe we're close. We don't know. You're starting to see the application of AI from the use of personal assistants to now AI agents. You're starting to see now there's been a massive explosion in AI meme coins, what I call AI agent meme coins. A lot of them are absolute rubbish, but there's some interesting ones. There's one that writes its own and produces its own music, and the chain behind that has its own record label. You can create an AI entity on social media and tell it to post and earn income for you, tell it to make videos. It's just been an absolute explosion. Potentially, it could be the AI agent market could be bigger than the SaaS market over the next 5 to 10 years. I've heard that talked about a few times. So there's a massive explosion in the use of AI because AI is just the smarts. You have to enable it by giving it access to a wallet or giving it permissions to do things. And you can instruct it what to do. But now it's going to be very, very hard to determine what's real anymore. So
Yes.
there will be a lot of content on social media that's entirely generated by AI. There'll be potentially blockchains launched by AI. There'll be tokens launched by AI. It's quite incredible, the sort of potential, but they've all been highly speculative. A lot of them have been pumps and dumps. You've got to look at the underlying machine learning capability behind the protocol before you get involved, but most people are just buying them for the hype. But I think once this hype dies down, you will see a growth in AI agents and mainly in DeFi AI, which is the use of an AI agent to take your funds, you give it access to your wallet, and you say, go and earn me the best yield you can on my Solana token or whatever it may be, my Ethereum token. And it goes away and it does all the research and it finds the best DeFi protocol and it puts it in place and it monitors it every day. So that's just going to be potentially a really significant step forward for the industry.
Yeah, that's quite tectonic. All right, Greg, thank you for giving us an introduction to what 2025 looks like. I think for the audience and the listeners, 2025 is going to be an extraordinary year. One never knows what's going to happen, of course. Could be the year the UFOs arrive, who knows? But the point is that all things being equal, 2025 is being very well set up for how would you say it, maybe the legitimization, the bringing in of firstly Bitcoin, but then ultimately cryptocurrencies and crypto assets into the mainstream realm. And we know there's plenty of resistance there. But when you start seeing major treasuries around the world deploying to it, there's no choice. And also, of course, the single biggest investing company in the world, BlackRock, now thoroughly entrenched in the ETF BTC and now looking at others. This is starting to become mainstream. It's what we've been looking forward to for now 5 years, and it's happening all around us. For the audience, please like and subscribe. Hang with us for 2025. We will be giving you a podcast every week, and often with Greg and I traveling around the world, Singapore, Hong Kong, across to the eastern states and over to Europe. It'll be a big year. We'll keep you up to date with conferences, up to date with market movements, and up to date with our sentiment on things. And we'll keep an eye on Ripple XRP for those people that want to give us a hard time. For now, bye for now.
Cheers.
Thanks, Greg.